Eddie. Welcome.
Oh, thank you. Very happy to be back.
Yes, just as a refresher, Eddie is a very interesting individual. He's a retail investor and a data scientist. One thing that I respect about this guy is a very, you know, good friend of mine, family friend, family friend. He's family to me. He is someone who has a somewhat similar background with me. He hails from Uganda. But we have these fascinating conversations about building wealth, and we actually act on what we talk about. And last time we were talking, he had some positions in Palantir, SoFi, and as we speak, he managed to 6x his money. Like, in other words, he got 650% return, and over a period of, I think, that was almost 2 years, right?
Yeah, about that.
Yeah, and we are going to talk more about his thesis, his investment thesis, and how he identifies those companies, and also a bit more about his experience in the real estate market. But currently, Eddie is based in Alberta, Edmonton, in Alberta. So, Eddie, welcome again. Can you tell us a little bit more about yourself, like, in short, what has changed since we invited you to the podcast?
Um, I think I came in at the earlier days of the podcast, if I
Yes,
remember
you
right.
were actually the first
Uh,
individual.
yeah, not much has changed really. Personally, I mean, I moved provinces, but not much has changed. And in the market specifically, though, I've done quite well, I would say.
Yes,
Um,
congrats.
Thank you over that period of time. And not that anything changed, but
Yes.
perhaps I kept executing on those some things we talked about and just keeping on the journey.
Yes, that's interesting. And I always like to be transparent about our conversations here, that this is educational content and also entertainment purposes. Eddie and I were individuals who like to talk about the markets and all this, and we execute. But this conversation should not be taken as investment or financial advice. Always ask your investment advisor, or if you want to learn more, you can reach out to me or Eddie specifically, because investing is personal. Now, Eddie, there are thousands of stocks, particularly in the US stock market. If you look at the Nasdaq, maybe probably more than 1,000. If you look at the New York Stock Exchange, boss, there are quite a lot of. How do you then pick stocks, individual stocks, and then decide to say this is the best time to get in? Because I remember when you're getting into Palantir and SoFi, and you can give us a background of what Palantir does in brief, or SoFi as well.
Yeah, I think just as a caveat, one, interestingly a bit conservative when it comes to like investing in the market.
Yes,
Um, and I wouldn't ideally advise people to go picking stocks. That's one.
exactly.
In
Why?
terms of,
Why?
yes,
Why?
because it's very hard to outperform the broad market. It's
Yes,
very hard to beat the S&P 500.
yes,
And normally, a lot of people use that as a benchmark, right? Now, if you
yes.
want to make money in the short run, it's very attractive to go and buy individual stocks, and you're hoping that you would outperform the market. But
You're
it's a
smarter.
very difficult thing to do. So broadly speaking, really, my approach over time has, I would say, become more conservative and with a bit of wins here and there.
Yes,
So in that regard, I like to allocate money
yes.
to, in fact, a portion of my portfolio is in the S&P 500,
Interesting.
right?
Yeah.
And then I have a couple of companies that I hold over time that have
Few.
yes, but a few, not too many, that I've researched over time and that I find are good companies to invest in. And ideally, over time, I invest money, and when it becomes very risky, whether it's the broader market or the company itself, I tend to rotate money out of that and put some into the S&P 500,
To
and
take the
then
profits.
sometime exactly rotate money out, rebalance it, have some cash, and then mainly I rotated into the S&P 500. And then when I feel like there is a huge opportunity, a
Yeah.
huge decline, can always put the money and move it back into these
Individual
companies.
stocks.
And the cycle keeps going, right? But I'm
Mm.
not the one to go 100% in or,
Yes.
a large portion into single particular companies.
Yes.
Yeah.
Yeah.
So that being said, that's pretty much the journey that I've gone on. We've talked about SoFi and Palantir, some of the positions that I hold.
Mhm.
And Palantir has done quite well. We've had
Yes.
a huge run, and I've been in Palantir since the times when we were at about $7,
Yes.
right? In fact, I actually got into Palantir initially at $23.
Yeah, let me show the chart for Palantir here, right? You can see this is Palantir. You can see that if I look at it came, like even you got in around probably $7. I remember we were talking about that, right? So you can
Yeah,
see,
I kept buying heavily at between 7 and
yeah.
but initially I got into Palantir at about $23. And I remember that was during the I remember we had a stock market frenzy. A lot of
Yes,
companies did well, some imploded at the time. And I remember Palantir going from about 23 to they were still young on the market. Historically,
yes, yes,
Palantir has been executing for about 20 years.
yes,
But they listed only recently, a few years ago. So
yes.
they just become public. And I remember the stock, I think they
It's a
listed
growth
about,
stock.
yeah, they listed about $10.
Yes,
Um, and the stock ran up very quickly. And
yes,
I got interested in the company, and about $23 I got in.
yes,
And we had the stock run up to 35 or something like that. And
yes,
then we had that over time, that huge decline back to $7,
yes, yes,
right?
yes,
And the beauty is that over time, as you continue to research these companies,
yes,
you get you become a lot more convinced of the potential. Uh,
yes,
Palantir itself kept executing. The
yes.
company kept going sideways. And if you look at the management and the team that they have, Alex Karp, you look at uh, Sankar, they've been executing and introducing products over time, right?
Mm-hmm.
But at the time, the stock went way down in reverse of what is happening, despite the quarterly reports, despite the partnerships that they were making.
And
Um,
also even less, actually they have no debt from the last time that I checked, even though they have a lot of free cash flows.
their balance sheet is pretty good. Very cash heavy, no debt. They keep executing, introducing different products. Because when they came in, um, I think you had Gotham,
Yes,
which is one of their products, and Foundry. Those were kind of
yes.
the main flagship products at the time. Gotham for the government, Foundry for commercial.
Mm-hmm.
But since then, they've introduced more products. And
Yes,
more recently, with the boom in AI, then they quickly introduced AIP as
yes,
a platform that companies can leverage to, in a sense, get at the other products, including Foundry. It's kind of built on top of that. So they have been very innovative. So while they were doing all that, being quite innovative, having a huge balance sheet, having no debt, management being like on point every single time, literally every single quarter, they have executed as per and even much more better than what they had promised.
yes,
There's been a quarter where they have come up and they revise um, their earnings downward. It's always been beat, beat, beat,
profit growing,
and the profits have
profit
been growing.
margin growing,
Yeah,
debt,
literally,
the debt, long-term debt declining, increasing balance sheet, their cash flow. But
exactly.
they currently have, I think, very high forward earnings. For those who don't know, basically, if I'm buying a share today, my expectation is that if I'm long, it's going to go up. So what companies do on average, the corporate earnings in America, I think has been plus or minus 7, right, percent. But now, if you see companies that I think the margins have been very, very high for Palantir and even SoFi, and even most of the Mag 7, like companies like Amazon, Nvidia is also doing really, really well. But I got a sense that I think when it went to 125, it was like it's too stretched in terms of the valuation based on the fundamentals that they have. So, what's your comment on that? Do you think the stock, would you be opening a position at that level right now at, let's say, $80 or above?
I would say there are two approaches to
Mhm.
um, that I would say are out there to investing. I like to dollar cost average, right? And
Yes,
then some people dollar cost average, irrespective of the price,
yes.
right? Um, I like to pay attention to the price, and if I feel like the price has gone, the market has gone crazy, and rewarded the company way beyond what they should fundamentally, then if I'm dollar cost averaging at the time, then I'm gonna do it much more slowly,
Yes, okay.
right? So technically, given the time frame, yes. If you are looking at long term, if you're in a company like Palantir
Mhm.
and like, oh, I would I am looking at this 5 years out. I don't need the money right now. 10 years
Mhm.
out, I would buy
Mhm.
Palantir at 120, no problem. Right?
Okay. Mhm.
Because while it could be generally agreed or believed that the company has like outrun the fundamentals, the stock has outrun the fundamentals at that point,
Mhm.
then you could say that no problem, I'll get the shares. The fundamentals will catch up because I believe in the execution of the management. I see the products that they are doing, and as long as they keep executing, the company will catch up.
The
No
risks
problem.
now, what if things change fundamentally? And if you, because, and I'm just gonna push back there
Oh
respectively.
yes, no, just this one.
Big, please go ahead.
Yeah, this
If
one
you,
thing. So that's one approach,
yeah,
right? The other approach is the more conservative, and that's where I fall,
yes,
right? Which
yeah,
is I'm a regular retail guy. I don't have a
yeah,
lot of money stuck somewhere. I'm
yeah,
trying to
optimize,
invest and make money, grow my portfolio, and also be able to provide for my family,
yeah,
right? So while I have a position that I can hold long term for about 5, 10 years, for sure, there is that. There is a portion that I need to be able to actually aggressively grow that money in the short term, but also conservatively manage it. Because I don't want to move
yeah,
from what I have and go down 50%.
yeah.
That would be, no, I need to grow another 100% to make that money back. I don't want to be in that position.
To
So
even break even.
exactly. So I try to avoid that. So I try to watch out for the fundamentals. And when the company runs that quickly, for that portion of my portfolio that I need in the short term, in 3 years, I'll need that money. I'm not going to buy Palantir at
Yeah. Okay. So,
in fact, I'm going to,
mhm,
if I have a good position, which I did at the time,
yeah,
I'm going to cash out at that point and
yeah,
hold the cash, right?
yeah,
And then when we dip down to a fair value,
yes.
I don't think we would have the bandwidth to go into the numbers,
Yeah.
but Palantir at 70, for example, could be like last week we had with all these uh, uh, political issues happening and affecting the
The
market.
tariffs in the US by President Trump.
Exactly.
Yeah.
We had Palantir dip all the way. The whole market broadly has
Yes.
been on a rampant behavior.
Yeah,
We,
we had a correction. The S&P and the Nasdaq, they dropped at least 10%. So that's
yeah.
technically a correction, a market correction.
Yeah, exactly. When we have a correction like that, then I'll go in at 70, right? And
Yeah.
I'll be buying much more shares at that point than I would be buying at 120.
Okay, fantastic. Yeah, okay. I think you have explained it very, very well in my view, because my approach though is a little bit different, and it's okay because I think I am more conservative. I think in that we align. I like to just get in when there's a margin of safety. I've realized that sometimes if you are just patient, I know we are generally impatient human beings. Sometimes if you have cash, that's it, right? But more fundamentally, the most important thing is to have an emergency fund. That means you have 6 to a year's worth of uh, money to cater for their living expenses. Why is that important? Because in moments like that, if you lose the job, you see in the US, a lot of people are losing jobs. There's the Dodge, the economy, the tariffs, and even here in Canada, I was watching on the news, people are losing jobs in the steel industry. It happens. In the US, people are losing jobs in Starbucks. It's a normal occurrence. So if that happens to you, you don't want to be selling when the market is 20, 30% down, or even if you have individual stocks. So that's fundamentally very important. And then looking at the fundamentals like you do, Eddie, like you're looking at the products, the leadership, which is fantastic. Now, currently, like I understand you are holding a bit of cash. Why are you kind of hesitant to jump in right now? And what are the reservations? Do you see any risks in the market? A lot of elevated risks?
Absolutely.
Yes,
I did take quite a bit of cash,
yeah,
one for personal reasons, but also two just to balance my portfolio. And I
yes,
would say I'm quite cash heavy right now.
yes,
Um, I was tempted to dip in a little bit when the
yes,
market crashed like a week ago, but I
yeah.
didn't.
I wouldn't call it a
So
crash though. It's a market correction. Market
it's a
crash, I
correction.
think,
Let's call it a
yes,
correction.
yeah,
Yes, when we had that correction, I was tempted to get in, right? But
yeah. Being a
I
human
kept on
being.
to my cash. I kept on to my cash. Um, and there, yes, we invest in regards to fundamentals and in particular companies, right?
Yes,
And for the S&P 500, generally, you could talk about what's happening broadly in the
yes,
markets, right? And you try to um, keep updated on what's happening, economic reports are happening,
yeah,
coming out, and how the economy is doing broadly. I heavily invest in the US, right?
yes.
So
For any particular
now,
reason?
I mean, one, I don't think I have the bandwidth to collect a lot of information about all these global markets.
Yes.
It's very difficult to, first of all,
Yeah.
uh, keep up to date on everything happening just within North America,
Yeah.
right? So, given the bandwidth of time, I'm more comfortable in US companies, in
And
US
there's a lot of liquidity as
in the
well.
US market. And then there is, yes, there is liquidity because they hold a huge chunk globally, a huge
Yes.
chunk of money flowing into the stock market. It's a huge percentage goes into the US, right? So there's a lot of liquidity. You can go in and out without worrying a lot about whether you will be able to sell your position or not when you need to. If you need the cash, you can get out.
Yes.
Um, so I stick to a lot to the US. Some companies like Palantir, for example, are involved in broader markets, but that is often a small percentage of their actual
Overall.
revenue.
Yes.
For example, a company like Grab that is in Asia.
Yeah.
Um,
I have heard about that. My colleague, my business partner, Blooming, a mutual friend, she was telling me about that to say this is a stock that is interesting. And I'm gonna look at it. Usually, I like to drill down and do my own research, even
mhm,
regardless of sometimes what analysts say. And
mhm.
I have great respect for analysts, but I like to do my independent and own analysis to look at the fundamentals, the balance sheet, the leadership, because it's my money, right? It may not be
Exactly.
as much, but for me, it's the family income. It's I have to make very decisions that I'm comfortable. Like I have to sleep peacefully at the end of the day.
Exactly. So markets that I don't understand, I keep away,
Yes,
right? Markets that I feel I can get information and can understand, then that's why particularly the US, right? But on that point, we're talking about why this market particularly, or why these companies, and
yes,
why cash heavy. I want to
yes,
go back to that. They're basically, if you read that, I would encourage anybody who wants to understand valuation in the market. I would say go read anything from this professor. Is he called Aswath
Aswath, the Dean of
Damodaran?
Valuation. Yeah,
Yes.
Damodaran. Yo, my.
Go read his books on valuation.
He has a
Um,
YouTube channel. He writes articles. I read each time I
yes,
see it. Howard Marks, that professor that I have difficulty pronouncing his name, and even some letters from Warren Buffett. I like to read those
exactly.
things. They are rich with, they're pregnant with a lot of experience and a lot of very interesting things.
Yes. So he has two approaches of valuing companies.
Yes,
One is the fundamentals of the company, which we all get, and that's what a lot of people use
focus.
to try and
Yes,
evaluate and do all these models on. Second approach that he talks about that has to work in relation, you need to
yes,
understand the story of the company.
yeah.
Now, the question is, how do you evaluate the story of the company and try and put a number on
I see.
it? And he has a book on that too. And so when you're looking at, if you're trying to evaluate from both perspectives, then yes, a company like
Tesla.
we were picking out Tesla, for example,
Mhm.
right? Fundamentals are great, but when you look at the story, it's affecting the stock
Yes,
right now,
yes.
right? Given the CEO's involvement, Elon's involvement in all these different things,
Yeah,
right?
and Doji and MAGA.
Yes, so if you put these things together, it would have made sense to sell at 400,
Oh
right?
yes. But
Um,
but why don't people do that? And I wanted to just chime in there, Eddie, to say, look,
yes.
I think it's a classic human behavior, and that's what I've seen to say. Sometimes when there's a sell-off, a lot of people they panic, right? And that's when Warren Buffett, and I've also learned from him, just by these public lectures, to say, look, as long as you've done your research, you thoroughly understand the fundamentals. That's a wonderful time to actually get it, as long as the fundamentals are intact. I am seriously considering Tesla, and with the view to say, look, for the next 4 years there might be the volatility, but once they do the self-driving, but I was discussing this with Blooming at the podcast to say, in China there's BYD, but there are these tariffs, there's the global and the macroeconomic outlook issue, like the tariffs, the reciprocal tariffs. It's like there's gonna be a lot of volatility as long as he's gonna be in Washington, in White House doing these things. It might alienate quite a number of potential clients, right? And the stock, the margin, profit margin might drop, and he might come up with another wild story, like you're saying, okay, it's gonna be great and stuff like that. But at some point, you get to a point where investors will say, look, you have to deliver. If not,
Mhm.
then the stock is going to go down. I saw there's this professor, I forget his name, Professor Scott uh, Galloway, I think.
Oh,
And
yes.
he said uh, nobody can really predict the stock market, but people try, analysts, right? It's like he sees the Tesla stock going down to $150. But now, I like to say, you see, Tesla, it went down to about 487, right?
Mhm.
Now 55% down. That means if
Mhm.
someone got in at the top, they would have a haircut, not just a haircut, right? It's like, so that's why sometimes I think I like to wait, because uh, while you wait, you can do that. Some people, they use options like what I'm now trying to do. I've been testing the data and considering, using some covered calls to say, whilst the stock is pulling back, it's bearish, you're collecting premium. For Tesla, you're looking at 900 if you are going optimal or maybe aggressive, right? So if you have 200 shares, that means every 2 weeks you can get 1.8, 1,800. But the stock can be called away. If it
Mhm.
continues to go down, still, it's more like you have a put position, because you open the position by selling a covered call, right? Basically, you should have the shares and then you sell the option contract for that. And preferably, for a strike price that is greater than the current price. Then if it goes up, you and hit the strike price by that time frame, if the stock is called away, you make the profit as the difference of your buying price and the strike price, plus you will
Yeah.
have collected the premium, right?
Mhm.
If it goes down, you can keep the premium. So that's classic, but if it goes beyond, then you're going to lose the potential upside. So if the risk is kept there.
Yeah, absolutely. And I think the broadly, I think what we're trying to say is, what I take away from this is, one, you want to understand what your limitations are for your portfolio.
Mhm.
And yes, and understand that too, there are multiple approaches to investing,
Yes.
right? Multiple approaches in a market, and you need to be able to uh, pick and compartmentalize your portfolio accordingly.
Your own situation. Investing is
Exactly, to your
personal.
own
Yes.
situation. Because you could have some positions for the long term, right?
Yes.
For 5, 10 years that you don't worry about and you're just going to DCA. That's one section of your portfolio. And then you could have another section of your portfolio that you want cash flows for. And
Yes.
therefore, you need to be more, well, you need to be more open to putting risk on and risk off accordingly,
Yes.
as the market trends change and as the companies of interest in change, right?
Yes.
Um, and then for the really long term, or just to balance the portfolio, you can have sections of it that you put, say, for example, into the S&P 500 just to keep your money, right?
Yeah. Yeah.
So understanding that it's not a one size fits all, and
Yes.
then being able to manage that accordingly, as per the market trends is a really important aspect, I would say. I think broadly that's what I'm taking away.
Fantastic. Now, I'm curious if you have any insights. Now you are based in Alberta, and we were neighbors when you were here in British Columbia. What has been your experience? Are you kind of like thinking or considering shopping in the real estate? How is the real estate market there? And for the interest of those who don't know, Canada has 10 provinces and territories, and Alberta is one province where, as Canadians, it's rich with oil and a lot of other resources, natural resources. But then there are other aspects that are dealt at federal level, let's say foreign affairs, global affairs issues, like finance, but of course at province levels, they have other issues that they do. And you have your Premier, Daniela Smith, right?
Um,
And we have our Premier here, Premier Abby. And what I found interesting is that the tax regimes are different, right? If you go in the restaurant here, we tip people, there's GST. If you in Alberta, you guys, do you like how are the tax in the real estate
yes,
as
so
well? Yeah.
I mean, I moved to Alberta just a few months ago, and once I moved here, the question was, why did I not do this early?
Yeah. Interesting. But it's cold over there, right? Here we have the
Yes,
most beautiful weather in British
so
Columbia.
the weather, especially in the winter, may
Yes.
not be that great, but I'm okay with it. I'm okay with the cold weather.
Fair
Sometimes
enough.
we go to negative 45 degrees
Yes.
at night, right? And just recently, we went from -30 to +8 within a week,
Oh boy. I will still
right?
come to Bamfa again though.
Right. So if you're willing, I think, to withstand that and you're okay with weather, and honestly, if you can get around, especially if you have a vehicle, then personally, I don't find it to be an issue. But what I love about Alberta is one of the most pro-capital provinces in Canada.
Yes.
Um, so when it comes to taxes, we don't have the 7% PST that you have in
Yeah, PST, yeah.
that people have in British Columbia.
Yes.
And so very quickly you realize, and it doesn't, like when you're doing like regular day-to-day expenses, you go get your groceries,
Yeah.
you go shopping here and there, you go buying gas. And if you spend a little bit of money, it doesn't make a difference. But the moment you have large purchases,
Yes. Yeah.
And
Okay.
you see
Thank you.
that tax bill,
Yes.
7%. You talked about real estate, right?
7% of 100,000, that's 7,000.
That's 7,000. That's a lot of money, right?
Yeah.
When
A million.
I want to change my winter
Understood.
tires and
Yes.
had to get a brand new set of wheels and tires.
You
And
have
that
an
was
S,
about,
you have an SUV, right?
yes. So that was about 2,500. And when you realize you're not paying 7% of that,
Yeah.
and you're only paying 5% and you save a huge amount of money. So that money comes back. And I love that.
And
Absolutely.
and then you can allocate it somewhere. But for me, I think you'll have to convince me because as an economist, I look at the opportunity costs, right?
Yeah,
There
absolutely.
there
I
are two
get that.
sides. I love the weather here. But I wanted to pick your brains. Thanks for sharing that, Eddie. I wanted to pick your brains. Are you kind of like considering the real markets and what are you real estate markets? What are you observing there? Can you walk us through if you have been, kind of like doing real estate? In British Columbia, real estate prices, they are crazy. Average rent, I was looking at Surrey, the last time I checked, it's 2,300 for a two-bedroom price, and it's even more expensive in Ontario. So
Absolutely. Absolutely. I'll share a story um, in a bit. So, one of the reasons after living in British Columbia for about 10 years, I
yes,
decided to move to Alberta is to try and diversify our portfolio as a family. Yes, we're in the stock market. Yes, we have jobs, but we also want to get into real estate,
interesting.
right? And normally for it's a big thing as a young family to buy a property and
Yes,
actually own property,
yes.
and huge step. And when we looked around, we found that prices for real estate for homes in Alberta are way better than BC.
Mhm.
For
Way
example,
cheaper. Mhm.
a quick comparison. Um, a house that will cost you about 500,000 here, you could get a 3 to 4 bedroom house, 1.5 bath with a legal basement.
Yes.
And a legal basement means you can actually rent it out legally,
Mhm.
or you can have another family come live there legally.
Yes.
Would cost you about 500,000, brand new 2025 bill.
Yes.
For the same type of property, same square feet,
Hmm.
similar environment in Vancouver,
Hmm.
I would bet you're looking at about 1.2, 1.5 million starting,
Hmm. Hmm.
right? So when you're a young family with I would say, limited resources and trying to grow with what you have, and also when you go into the process of trying to get approved for a mortgage and all that,
Hmm.
you realize that there are particular things that they look for. Basically your income over time. They look at your credit score. They look at the sources of your income. You may have multiple sources. For example, if you
At,
have
the,
two,
at, at this
it's
table.
it's interesting. Yes, if you have two jobs that are full-time jobs, regular full-time jobs, turns out when you go to the bank to get a mortgage, they wouldn't take both. They know you're doing two of them. They'll only take one to pre-qualify you because you're
Yes.
more risky apparently if you have two. So tiny little things like that.
Eddie,
When you put
can I
yes,
just provide a bit of context here? Maybe we have viewers from Africa or other parts of the world. Not that
yeah,
everybody may not know, but even
mm,
here, when you are talking of like 500,000, so very few people can have that amount of cash. So people here in Canada, they go for mortgages. Basically, you get a loan, and usually they have like 5-year term renewal, right? So even if you look at amortization period, like that is the lifetime for the loan. Let's say if it's 25 years, but every 5 years they then reassess your financial situation and stuff, and then extend it. So that's the thing. People don't buy houses on cash here, most people. So that process alone of doing that, you have to work with a broker and everything. That includes assessing your income, like what AD is saying. It's not an easy process for most people. Yeah, I just wanted to
Absolutely.
provide a background on that.
Oh yeah, thank you for that. Absolutely. And like you said, you basically, for a young family, when you put all those things together, um, unless you have a lot of cash sitting somewhere and that you can afford to go buy cash, or you can put a huge down payment,
At
more
least
than
20%.
20% down,
Yeah.
um, then you're going to have to make choices. You can either pre-qualify for, I know in the BC Vancouver market, and the markets are different. This is another thing that I learned. In the
Mm-hmm.
Vancouver market, you can either get pre-qualified for a large amount of money,
Mm-hmm.
which banks tend to do, because otherwise very few people would actually qualify to get a 1.2, $1.5 million mortgage
Yeah.
pre-approval. So you can either do that, but what that means is your mortgage payments are going to be high,
Yes.
right? And that would, of course, affect you down the line. Or if you move to a market like this, now I'm only looking at a $500,000 house, right?
Mm-hmm.
And when we look at 20% of
Mm-hmm.
um,
That would be 10% would be 50, so 100K.
50, so looking at about 100,000. If you're doing 20%,
And
for a
then the
first-time home
other,
buyer, you can do anywhere between 5 to at least 5%.
but you get
But again,
hit
there
by
is,
insurances and
and
all
then
these
you
other
get to
expenses.
insure the other amount. But the other thing that I also learned, and I'll get to that actually. So you can either do the Vancouver market where
Yeah.
your mortgage will be high, or you can relocate to these other provinces, these other areas that are much cheaper,
Yeah.
and your mortgage payments will basically half. What
But
that means
with
is then
with less favorable weather conditions, I must put the
exactly
caveat.
what one of the things the realtor were joking, you mentioned, he was like, you know what, in this market, you basically win some, you lose some. You have
Oh
to give up
yes,
some things and
yes,
be okay with the
that
winning on some of the fundamental things that you want. I personally, I rather have this fluctuation in weather,
yes,
but keep half of my cash for investing,
yeah, yeah,
right?
makes sense.
So on that same house, for example, that if you're looking at about hypothetically $500,000 dollar house, 20% will be about 100,000. If
Yeah,
you 5%, if you qualify, is around 25,000, and then you
yeah,
insure the rest,
yes,
right? But what that means then, over 25 or 30-year mortgage, then you get to keep more cash.
yes,
And at least um, in the long run, hopefully able to reallocate that cash in the market, which I'm planning to do, right?
yeah,
And
yeah,
it's more manageable too, because we talked about earlier in the chat. We talked about having an emergency fund,
yeah,
right? You don't
yeah.
want to be wiping all your money out. You don't want to be spending 50% of your earnings
Basically,
onto the mortgage.
basically a house poor, and then what happens
Exactly.
if the house runs into you need renovation and stuff? You go for a line of credit, you borrow more, and basically you get into this situation, you lose your job. So that's a situation some people find themselves in, to say, look, now I'm stuck in this situation. So I think I definitely of 100% of the camp that I want to have the rigor, the latitude and the leeway to be flexible, because at the end
Exactly.
of the,
I
things
think
happen in life.
you nailed it. You want to have the latitude and flexibility. You want options,
Yes.
right? So the way I look at it, I would like to get into real estate as an option to diversify our
Invest.
portfolio long term. We
Yes.
have the market, we have our jobs, we might have a business,
Yeah.
but we also have real estate as a wealth
Multiple
building
streams. Yeah.
machine, right? But I
Yeah.
want to do it in a way that is manageable,
Yes.
uh, in a way that doesn't strain me. Should conditions change
Yeah.
financially,
Yeah.
economically, politically, whatever the case. Like I remember in Alberta several years back, you had a situation where there was a huge change politically and the economy got crushed because it became heavy on oil. And Alberta is a heavy, is so dependent on oil. and the economy crashed here. So when you have situations like that, I always want to at least have the optionality. And you only do that by having that huge margin. Where if I'm paying lower in terms of the mortgage, I'm paying way less than I can actually, like at least,
Or if you lose one of your income streams, right?
exactly. I should still be comfortable. I shouldn't be straining. And that is the approach for me. So moving to this market in a sense that allows me to have that optionality. Should things
Yeah.
change, I should be good. I should have options. Should things stay the way they are, I will do way better. Because then I have more money in my pocket, I have more money to invest.
Yeah, and another option that I'm just thinking of as you were explaining this, I think there are also other options of maybe not owning, but people own houses for
Mm,
different reasons. You don't want to be moving around
exactly.
every other time, but also there are other strategies to be exposed to real estate by owning real
Hmm.
estate trust or maybe investing, let's say in the S&P or in Canada in some indices that own commercial properties or even residential properties, right? But the good thing about that also is that let's say because when I compare the returns on real estate and the stock market, right? I want to normalize the data. In other words, let's say if you put 100,000 down payment in real estate, I want to put that same 100,000, let's say, in a real estate trust, right? And then 5, 10, 15 years, or maybe go backwards. And even though the past may not be a good indicator for the future, right? But it can kind of like give you some insight. So that's another way of actually being exposed to real estate without having a lot of exposure. Like you need down
Absolutely.
payment, there are lawyer fees and stuff like that. But at the end of the day, you still need somewhere to live, right?
Absolutely.
That's
Absolutely.
interesting. So
Absolutely. I mean, like you mentioned, REITs are a very good option to actually invest in real estate without particularly owning hard assets.
you get
Um,
dividends, that's
yeah.
free cash flows, but
Mhm.
it's just about how you want to allocate your capital, right? And
Mhm.
where you can get the best returns. And sometimes you may think you are smarter, I'm getting into real estate or I'm getting into the stock market, and then you get crushed. So these things happen.
Absolutely.
Yes.
It's funny that you mentioned that. Absolutely. Was having a conversation, I remember the other time, and one of the friends mentioned, and I think it's one of your people who came onto your podcast, one of your
Yeah.
guests. He
Yeah.
mentioned, especially in the market, sometimes you perform quite well and you
Yes.
get too confident and too
Oh,
arrogant.
Tinashe Mkogo, right? Yeah.
Yes, you get too
Yes.
arrogant
And you think you're
and
smarter, right?
you think you're smarter than the
You're
market, and
basking
the
on
market
the
comes with a hammer and crushes you, right?
I mean, I like to look at, for me, like as we have discussed, I like to look at the endurance, like what Morgan Housel says, to say, if I'm able to beat the S&P 500, I want it to be 5, 10 years. If I'm able to do that, then I know at least at that time that strategy is working, but it doesn't guarantee that it's going to continue working. Because even if you look
Exactly.
at the annual performance of Berkshire Hathaway, for example, that's the firm that's managed by Warren Buffett, and his colleagues, they have been able to beat the S&P 500, but there are some years they didn't beat it, right? But
Exactly.
overall, when they did beat it, it was big, and most of the years. So that's the thing. Investing is not it's not easy. It's because it does not. It's very complicated. It's not just like what you think. You could be wrong in a big way, right? So, but that being said, I think the most important thing is to be able to be profitable. I like trading, I like investing, but I want to do so with a long-term perspective. But I do spend a lot of time doing this. Right now it's weekend, but I actually have quite a number of things that I have to do, some companies that I'm reading annual reports, just trying to understand, and also reading reports to kind of like understand the outlook, particularly the US and Canada and even other parts of the world, because we don't live in an island. Um, just now, before we jumped on this call, I was reading an article by Paul Krugman, who is a very famous economist and a Nobel laureate. And he had an interview with this guy, I forget his name, but I think it's Neil something, who does macro forecasting. A lot of people want this focus, right? But his particular focus is like he's focusing on what's happening in Washington, D.C., the rules, the bylaws, and also the data. Of course, we have the gold standard of the data that comes out in the US. So his point was like they see more downside in the US economy, right, with the tariffs in the short term, right? But his clients are kind of like the pensions fund, big hedge funds. They want to know those risks so that they can also consider taking some risks. So for me, I like to kind of like look into those things. And I know, Eddie, you also spend quite some time doing research. Now, is there anything else that you wanted to share about the lessons and the experiences that you are having, you moving from BC to Alberta, but also participating in the stock market? And one thing that I like about our stories is that we didn't have trust funds. We all went to the University of British Columbia. That's where we went. And we are not by any stretch of imagination wildly successful, but we are in this journey of learning, right?
Yeah.
We are in this journey of making mistakes, but fortunately being able to at least take care of our respective families, right? And in a way, slowly building, at least for now, some profits, building our net worth in a way. And it's extremely not easy. We put in the work, but the major lessons that we have learned, Eddie, what would you say about those?
Yeah, absolutely. So it's a process, and we are all learning as we go. Um, I think for me, broadly, I want my family to be okay. I want to be in a situation where I'm able to take care of family, have the basics in line. I don't want to be in a situation where you're in distress, at least financially in the long term. Um, and also plan for retirement, right?
Yes.
So this is a journey. This is not a quick fix, a quick
Mhm.
um, make money quick
Get rich quick
scheme or
scheme.
anything like that. So I approach life and the market broadly
With the
like that,
respects.
with a lot of respect and humility. It's a process, and we're simply going through it. And hopefully, we learn, and hopefully, we get to where we want to be. Moving provinces has been, for now at least, it's been great. It's been working out great. I've only been here for about 6 months now, and a lot of things have changed. From the financial aspect of things, I feel like I'm able to retain more money simply by moving.
Yes.
And now we're looking to diversify as a family into other assets away from just the stock market. Um, and bottom line, I like the fact that we are able to get the optionality
Yes.
to do that, the freedom to do that. And if you can make decisions consistently in that way that allow us to keep more cash and be able to deploy it accordingly, the market trends will change, the economy will change, right? But if we have some form of a cushion that we can redeploy accordingly as we learn, if we make mistakes, we can recover from them.
Yes.
And we're not completely wiped out,
Yeah.
then I'm happy with that. So that approach, and also being humble, being conservative, because you make some wins, but that shouldn't get to you. We've been able to, I've been able to perform quite well in the market in the
Yeah,
recent
650% is wild. And I think probably you were lucky to get into Palantir and SoFi,
at the time.
at the time, at the right time. And, we don't know what the future holds. And that's what's exciting. And I like to say, Warren Buffett, I like to refer to him. I read a lot about him because he has been successful in this business. He's like, the wild thing about the stock market is my job is like, I don't know what Monday will be like. Like
Exactly.
human beings to be like, "Oh, on Monday it's gonna be like this," but ultimately, Mr. Market goes up and down. And if you are able to capitalize on those volatilities, that's what I do as a trader and also as a retail investor, right? To profit from that. And fortunately, I've been, at least so far, I've been able to kind of decipher some
Yes.
strategies to be
And there is another
profitable.
thing. There is another thing. So it's a journey, that's one. And the approaches, that's two. But as we learn these things, uh, you can learn, we do learn over time. We do learn by doing and getting burned. I've been there, we've all paid the tuition.
Oh,
Uh,
yes.
hopefully, if you get burned, you don't get burned too much that you can't recover, right? But in another part of learning is if you're able if you have the option to, it's good to invest in your learning. So yes, go like read books on investing, read books on evaluation. Follow these people who are the leading people across. I like X, formerly
Subject,
Twitter.
yeah, subject matter experts.
You have a lot of people there sharing very crucial information, sharing very important lessons that I've learned. You can learn from them.
But,
But also,
but,
if you can, this is
but,
where I'm going. If you can,
sorry,
the third
Eddie,
point.
there's a
Sorry.
caveat. There's a caveat,
Yes.
but also do your own independent thinking because
Oh,
sometimes people can say, and they can be plainly wrong, uh, not necessarily intentionally. Okay, please
oh
go
yeah,
ahead.
absolutely, absolutely. So again, like I said, the question, the key there is learning, not going and copying and pasting what other people
Your
are doing.
money.
We get information, come back,
Synthesize
you
it.
distill it, think about what you can take away, what you agree, what you don't agree with, and then you make a decision, your own decision. We're not here to, somebody made the X amount of money and they posted it on Twitter and they had a screenshot and
Oh,
you get so
yeah.
excited and you go and you do the same. No, absolutely not.
But it seems I
Um,
haven't seen those screenshots lately after the market started dropping. There was a point when I saw
isn't it funny?
a lot of screenshots. I've made this money, and I was like, "Do these people really know the market? Mr. Market is can be brutal."
Exactly. When people are making money, everybody is happy, correct? Everybody is in the green. When the
But
market goes wild on the opposite side, then people don't want to share their losses, right? But
I'm always
if you're
transparent
smart and
about
being
that.
conservative, hopefully you have some cash. And now
Yeah.
you're ready to deploy. In fact, you're happy. You're like, oh my God, what an opportunity. And you begin redeploying your money.
Yeah, I think at the end of the day, there are also some people, there are some people who might be trying to hype the stocks, and also they have a long and short position. They buy and sell high, right? They sell and buy. So if the market more like a trader, right? If it goes either way, they are gonna win. But maybe if the move upside is higher, then you kind of. But some people have some money to play with. Is there anything else in conclusion that you want to
Oh,
share? But
yes. And
yeah,
ultimately, yes, exactly. Ultimately, this is a journey. And with any journey, you can always go alone.
yes.
But like you go alone, it's difficult and it's hard. And
Mhm.
it can be challenging and sometimes you may actually give up. Or you could go as a group. What I mean
Yes.
is get a community, be a part of a community.
Yeah, we
We
have a
have a
community
conversation.
actually. We have the
We,
WhatsApp group. We talk.
exactly. Join these communities, talk to like-minded people where you can hire services for those that can. Um, Isaac here is a coach, right?
Mhm.
You hire those, pay for those services, pay for those books, learn, and then implement that information. And that's the journey. And if you go as a group and as a community along the way, it's more fun.
Yeah.
When you make money, you can share. But
Yes.
also when you have doubts, you can have people you can go to and have these conversations.
Yeah.
And that's how we learn.
Yeah. Thank you so much, Ed. It's always a pleasure to have you here. I have had the pleasure and privilege of knowing you, my friend, and I am so happy to see you successful in all your endeavors that you have been undertaking, and of course, notwithstanding some challenges. I like to be always transparent with people to say, sometimes as human beings, we may be inclined to show only the successes and the good moments, but as human beings, we do go through challenges, setbacks. But the most important thing is to fight on, wake up another day, and if you need help, you reach out and move on in life. So, indeed, thank you so much for tuning in to Streetwise Economics, and I hope to see you on the next one. Until next time, trade and invest wisely, and may the markets be on your side.
Thank you.